Many Americans have been concerned to see the recent rise in gasoline prices here at home. This short-term increase has been entirely the result of the Iranian regime launching deranged terror attacks against commercial oil tankers in neighboring countries that have nothing to do with the conflict. This is yet more proof that Iran can never be trusted with nuclear weapons. They will use them, and they will use them quickly. It would lead to decades of extortion, economic pain, and instability worse than we can ever imagine. The United States has never been better prepared economically to confront this threat.
What the president did last night in his speech to the nation was trying to make the case for Operation Epic Fury in an economic way, saying, is there an economic case for the conflict that could make Americans appreciate what he's trying to do there a little better? Let's bring in Michael Faulkender, former Deputy Treasury Secretary, and Doug Holtz-Eakin, American Action Forum President and former CBO Director. Gentlemen, great to see you both. Thanks for being here. Michael, I want to first read to you an ex post from our Treasury Secretary, Scott Bessent. He said, America's economic strength feeds into our great military strength. Economic security is a national security, and President Trump is leveraging both in this conflict, keeping Americans for generations to come secure and prosperous. I'm kind of wondering, even if the previous administration had tried to do what we are now doing, I don't know if we were economically capable of it. I mean, we were on much weaker foundations than we are right now, no?
That's right, David, because if you go back particularly to the Obama administration, and the Biden administration, of course, tried to double down on this, they tried to make us once again energy dependent upon others. One of the most important consequences of the president's first and second terms is to have become energy independent for the first time in 70 years. And so when you are a net exporter, when you are the marginal provider of energy to the global market, that means that if there are any shocks to the energy market, you're in a better position to manage those. And so the fact that we have unleashed the enormous assets that we are blessed to have as a nation, our natural resources, to unlock them and be able to utilize them in order to no longer be able to be held hostage by the Middle East or by Russia, that's an incredibly important asset that the Obama administration and the Biden administration, both of them wanted to make us once again dependent.
And Doug, I think you saw a bit of that today with a market reaction. We had oil way up. West crude, at one point, it was higher. I think it ended higher than Brent crude. So West Texas did. So it was up 11%, and yet the markets ended the day, 2 of the 3 indexes were positive. I mean, it looks as though Wall Street is not freaking out about this because they understand that not only do we have more oil than we've ever had before in the United States and gas, but we also have these incredible incentives in the economy from tax cuts and deregulation.
Oh, yeah. I mean, this is a sea change from a decade ago. I mean, if you think back to the financial crisis, Great Recession, oil hits $100 a barrel, and the U.S. economy is on its knees leading into that fall. It's nothing like that now. The difference when you are producing so much oil and natural gas and you get a price shock is a completely different story. So, you know, the economy has weathered this shock quite well. It's remarkable. And the best part about it is that while we're seeing gas prices go up and we'll see other prices go up as a result, there's no evidence that it's engendering a bigger inflation problem. Like inflation expectations, which is what people like to look at to see if people are overreacting to a near-term price rise, they haven't moved a bit. And so that's staying in good shape. We've got the tax cuts to support the spending. We've got a good retail sales report this week. So there's no real sign of a huge economy that's going to fall off a cliff. It's staying very strong.
Yeah. And, you know, I know the Atlanta Fed tends to exaggerate on the up and the downside very often. However, they just came out with another estimate of the first quarter at 1.6%. Now, you know, that's not a 3% or 4% that we were looking for, but at a time of war, to suggest that we have a 1.6% growth rate during that time of war, I think is a sign of a pretty strong economy, Michael.
Yeah, because remember, there are so many tailwinds for this economy as a result of the changes in policies that were implemented by this administration. So not only is it unleashing American energy, which generates cash flows. And again, one of the benefits of being a net exporter is that, to some extent, parts of our economy benefit from the higher prices. But in addition to that, of course, we have enormous tax refunds coming to the American people. We have the deregulation that is greatly reducing the cost, the deadweight costs that companies bear when they are providing goods and services. Yeah. And we are making it easier through things like no tax on tips and no tax on overtime to encourage greater participation in the labor force. So there are a lot of tailwinds coming from policy that even if we have a temporary blip from an elevated oil price for a short duration while we take care of this once in a multiple generation opportunity to take out, the cause of most of our geopolitical problems in the Middle East, the economy is in a much stronger position to endure it.
Although, Doug, the markets do want some kind of security. They want some anchor to hold on to, and they got it at about 10:30. But it had nothing to do with oil or specifically the war. It had to do with the DHS funding. President came out with a Truth Social posting on the battle between the Senate and the House on how they're going to put together a bill on DHS funding. At exactly that time, the market went from like down 600 to pretty stable, still down, but maybe about down 100. So, I mean, just that amount of stability on one issue that didn't necessarily have to do with the war or the economy really made the market feel a little more secure.
Well, certainly, Homeland Security is a very big issue right now. And to get that department have a financial footing is an important thing. Market recognized that. I guess the one thing I'd say about the outlook, David, it's worth emphasizing is tomorrow we'll get a jobs report.
Yes.
And despite the fact that we've averaged 11,000 jobs over the past year, unemployment rate's at 4.4%, and we're going to get another report that looks like that. Might even be worse than that. And it's no longer the case that the jobs report is the barometer of how the economy is going. People have to sort of readjust how they think about this economy. The productivity growth is driving the top line, and that continues to be true in this quarter as well as the previous two.
Doug Holtz-Eakin, Michael Faulkender, great stuff, gentlemen. Appreciate you coming in. Thank you.
Thank you, David.
Thank you.
Coming up, President Trump is doing everything he can to ease the pain Democrats' DHS shutdown has caused. We're going to be talking about it with Senator Mike Rounds when Kudlow continues.